You ready? You got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up. Raise them up.
All right. Good morning, afternoon, and evening, or evening, okay, to everyone over here. Welcome to another call, another currency call, okay, where you do daily dose of economics update, fundamentals, and I don't know, maybe political updates and things like that. Okay. So to begin with, okay, I would like to share about the FOMC meeting, okay, this Thursday at 300 GMT plus 8. Okay, so now it's probably going to be the most impactful, price impactful meeting this week. All right, so during the previous meeting back in December, okay, the FOMC actually doubled the tapering pace, okay, of its quantitative easing, of its bond buying, okay. So this month, okay, in January, the rate was carried out at I think it's 60, okay, 60. So bonds buying under the FOMC's QE program, okay, will be carried out at $60 billion for this month, okay. And then for next month, all right, February, you will further what do you call that? Further taper by another 30. So in February, they will purchase $30 billion worth of bonds, and then they will taper again by another 30 in March. Okay, hence in March QE will end. Okay, no bonds will be purchased in the month of March. Okay, for the month of March. So that is the plan. Okay, that was the plan for the previous meeting. So what can we expect from the FOMC this time around on Thursday? Pretty much no change. Okay, pretty much no change can be expected. They are likely going to keep interest rate, well, they are most likely going to keep interest rate unchanged at the targeted range of 0 to 0.25%. Okay, QE tapering pace, okay, will probably remain unchanged as well. Okay, most likely remain unchanged as well. Although there are many out there that speculate that the Federal Reserve may actually increase the pace of tapering. Okay, well, in a scenario, if the in a scenario where the central bank were to increase QE tapering, by, well, probably by an amount, okay, such that in February, all right, or actually 60 billion, okay, if the Federal Reserve were to increase QE tapering pace to $60 billion for the month of February, that means in February, QE will end, okay, it means it will end 1 month earlier, right? Initially, it was planned to end during March, okay, but then if they were to, this time around on Thursday, they were to double up the tapering pace again from $30 billion to $60 billion, then in February, QE will end altogether, all right? And what's going to happen, okay, is that the equities market is likely going to have a strong sell-off, okay, because of the FOMC's, well, very hawkish move, okay, if that's the case, all right, if they are going to, speed up tapering again. And then that will directly link to a strengthening of the US dollar. Okay, but that is just a possible scenario. Okay, but it's not going to, it's not a most likely scenario or something that we can expect to happen. Okay, it may happen, but it's not something that is widely expected as of now. Okay, another possible scenario is that the Federal Reserve will increase interest rates. Okay, but once again, it's not widely expected as well. All right. So I mean, moreover, QE has not ended yet. Why would the it is more unlikely that the central bank will actually hike interest rates. Okay, so if they're going to hold interest rate unchanged, hold quantitative easing tapering pace unchanged, so what can we expect from the central bank? Okay, so a couple of things to take note here. Okay, the first thing is interest rate hike timeline. Okay, we know that from the economic projection materials, okay, issued out in December during the December's meeting, that many of the members, okay, the FOMC members are actually expecting 3 interest rate hikes in 2022. Okay, and then of course, you know, analysts, banks, out there in Wall Street, in around the world, are actually expecting more than 3 rate hikes coming in from the from the Federal Reserve. Okay, ranging from 4 to 6 rate hikes. Okay, for the year of 2022, it's really quite hawkish, I would say. Okay, very hawkish if the central bank were to actually carry out 4 to 6 rate hikes. Okay, so what we want to know is, when will the central bank actually start to hike interest rates? Okay, that is the timeline. Okay, will it be in March? Okay, because as of right now, the plan is for QE to end in March, right? So it means that in March, if the central bank were to hike interest rates by 0.25%, it is actually fair game, right? Interest rate hike after the end of quantitative easing is, it's fair game, I would say. Okay, but to be honest, if the Federal Reserve were to hike interest rate in March, okay, that would definitely be very bullish for the US dollar. Okay, hence the US dollar will likely strengthen in March. Okay, if they were to carry out a rate hike. So the first thing to take note is interest rate hike timeline, specifically when will they actually hike rate. Okay, they may not be very clear. Okay, like we will hike rate in March, June, and September, or something like that. But they may actually play with the words, that kind of things, and then it may actually it's subject to interpretation, definitely. Okay, but the words that they use may actually give the market a better sense of an earlier rate hike can be expected, or something like that. Okay, but nonetheless, I will be going through the statement and things like that, the highlights of the meeting, and I'll break it down again for you guys on Thursday during the currency call, right? And then the second item to take note of is the central bank's plan to unload bonds. Okay, like Jerome Powell has mentioned during the recent testimony that if everything goes on smoothly this year, in terms of economic recovery and things like that, the central bank may consider to sell back the part of the bond holdings that he's actually having right now, okay, back into the market, right? So that will definitely be that will actually kickstart, I would say, the official process to policy normalization, to monetary policy normalization. Okay, so that will definitely once again be hawkish bullish for the US dollar. Okay, so two things to take note. All right, interest rate timeline, interest rate hike timeline, and the plans of unloading bonds. Okay, specifically when and by how much. Okay, what's the pace of unloading bonds? Okay, so any questions on the FOMC prep for this Thursday? Okay, but like I said, okay, we are unlikely going to see any changes, okay, in terms of interest rates and quantitative easing tapering from the Federal Reserve this Thursday at 300 GMT plus 8. But okay, in a scenario whereby they carry out any change, there will likely be price movements. Okay, but nonetheless, if you guys are going to planning to look for trading opportunities and things like that during the FOMC meeting, okay, yep, there will definitely be, I would say, plenty of trading opportunities. Okay, so if there's no questions, okay, I would like to head over to the charts. Okay, but before I go through the charts, let's just look through the economic calendar to see what what's going to happen in terms of, well, pertaining to euro, pound, and the US dollar, because it's Tuesday and I'll be talking about euro dollar and euro pound, right? So on Tuesday today, we don't really see any major news. Okay, German I4 business climate, not too big of a concern right now. Conference Board consumer confidence data, okay, coming in from the US, okay, at 2300 GMT plus 8, not too big of a concern as well, especially when the FOMC is just before, like probably like 48 hours before the, 48 hours before the this news release. Okay, on Wednesday, okay, new home sales data, same thing, are likely going to cause an impact as well. And then we have the FOMC coming in. Okay, pay attention. There's a press conference at 3:30 GMT plus 8 on Thursday. Okay, if we don't get any news, or well, we don't get any updates from the central bank through the rate statement, okay, then we can actually expect press conference to be more constructive, more meaningful, more informative, okay? Because the journalists and reporters will likely grill Jerome Powell, okay, central bank's chief, on what's your plan, when are you going to hike interest rates, what about unloading of bonds, etc. Okay, in terms of timeline and things like that. So rest assured that we may actually be getting something out of the central bank this time around, unless the central bank chief himself is tight-lipped. Okay, and then on Thursday as well, there's the U.S. advanced GDP quarter-on-quarter data. Okay, is expected to expected to rise by expand. Okay, the economy is expected to expand by 5.3%. During the fourth quarter of 2021, as expected to the 2.3% economic growth back in the third quarter. Okay, this is actually a very bullish. This is going to be quite a bullish, I would say, expectation for the US dollar. Okay, because if the result would turn out to be at least as good as 5.3%, okay, maybe 6 or maybe 5.5 or 5.9, then chances are the US dollar is likely going to take another round of strengthening this time around. Okay, on Thursday. And then core durable goods unemployment claims, pending home sales, unlikely going to cause too big of an impact on the US dollar. Okay, and then on Friday, we see that there is the core PCE price index month-on-month data to be released at 21:30 GMT plus 8. Okay, this is actually the Federal Reserve's preferred indicator, okay, economic indicator for inflation, for measuring inflation. All right, so we will definitely have to pay attention to it as well. Expected 0.5%. Okay, previous was 0.5% as well. No change over here. Okay, but I mean no change in the rate of inflation, rise in inflation. Okay, but I will still pay attention to it, because if the actual data would turn out better than expected, okay, better or higher than 0.5%, then what this means is that it's just going to motivate the central bank more in terms of tightening monetary policy in an attempt to tame down the ever-rising inflation. Okay, although this data is going to be released only after the FOMC meeting, but nonetheless, it's still going to contribute to the next meeting probably in February. All right, and then revised consumer sentiment, unlikely going to have any impact on it. And then next Monday and next Tuesday, we see okay, on Monday we see a series of German, Spanish, and Italian GDP, CPI, retail sales data release. Okay, once again, unlikely going to cause too big of an impact, because right now, the Eurozone inflation, okay, as a whole takes precedence over any other things. All right, and then on Tuesday, we see the US ISM manufacturing PMI data. This is something that I will pay attention to. All right. Because okay, this will actually indicate how the business activities in the United States has performed, okay, for the month of December. Okay, so whether or not there's going to be much price movement, that's one thing, right? But this indicator, okay, together with the ISM services PMI data, will give us a clue, a hint, a view into how business activities has been ongoing for December. And keep in mind, okay, in December, the Omicron variant, okay, the Omicron variant was actually discovered in, I think, late November. Okay, so in December, it will definitely have an impact on the business activities in the US as a whole. Okay, and it was actually the festive season. Okay, so we'll see if the Omicron variants actually have a negative impact on business activities through the manufacturing and the services PMI data releases. Okay, so that's pretty much it for the economic calendar. Okay, 1 week down until like next Tuesday or next Wednesday. Okay, now I shall move over to the chart. To begin with, I'll have this euro dollar chart over here. Let's look at daily time frame. Okay. So at the moment, okay, yesterday there was a strong sell-off. Okay, as indicated by this. Just put an arrow over here. Where is my arrow? Okay. Oops. Let's just point to this downwards arrow. Okay, so yesterday there was a strong sell-off, all right, and then somehow, okay, it actually retraced back, okay, through a H4 candle. We can see over here. Yes, there's a strong sell-off, okay, and then it actually bounced back up, like retrace back. Okay, so this strong sell-off, like I was covering, like I was telling the club members yesterday evening during our call, it was mainly due to the geopolitical tension between Ukraine and Russia. Okay, so it has kind of like escalated further yesterday, all right, leading to a strong sell-off, leading to a risk haven, risk off sentiment by the markets. Okay, and at the moment it seems like it's going to continue, okay, from this retracement, which is why at the moment I'm only looking for selling opportunities of the euro dollar. Okay, well, not only euro dollar, but the other currencies as well against the safe haven currencies like the euro dollar, like the US dollar, Japanese yen, and the Switzerland francs. Okay, but at the moment you realize that the retracement actually happened around the 1.13 key level. Okay, it bounced back up from the 1.13 key level, and at the moment it's actually heading towards that level as well. For me to look for a selling opportunity, okay, I will need euro dollar to break below 1.13 before looking for selling opportunities. Specifically, I have my entry at 1.128 over here, okay, and then my stop loss would be at 1.132, 40 pips, okay, and then my potential take profit would be at 1.123 over here, just above my next, just above my support zone, okay, my support zone over here. All right, so this is pretty much a slightly more than 1:1 risk reward ratio. Okay, yeah, at the moment I wouldn't dare to look for buying opportunities with all these uncertainties around the world going on and things like that. All right, so that's for the euro dollar. All right, let's head over to euro pound. Euro pound is a bit more tricky, okay, because both euro and pound, they are what do you call it? They are both risk currencies. Okay, so it's pretty much like a who is riskier, a comparison of who is riskier at the moment. All right, although it doesn't really make sense to compare, and we can't really quantify who's more risky and things like that. So we can only trade based off the chart and of course fundamentals. Okay, fundamentally the Bank of England is more hawkish than the European Central Bank. Okay, so monetary policy wise, British pound is likely going to strengthen more than the euro is going to strengthen. Okay, so I'm actually expecting the British pound to strengthen against the euro dollar. So at the moment, okay, let's look at the daily chart. Okay, so yesterday, all right, at this candle over here, we can see that euro pound, okay, actually tried to test well, it's the first time, it's the first attempt after it has broken the support of 0.84, okay, that euro pound is coming back up to test the resistance level. Okay, and you can see that there's a long upper shadow, okay, tested to break above, but the daily candle actually closes just below the 0.84 level. So at the moment I would say it's still testing to break above this resistance level of 0.84, okay, or maybe even key level. Okay, so what I am waiting for is, okay, for selling opportunities. Okay, so let me just bring my chart closer here. Okay, maybe not, because I'll cover the text. All right, so at the moment, euro pound, wait, this is 4-day, which is not good. Okay, this is the H4 time frame. Great. So at the moment, I'm actually looking for selling opportunities of the euro pound. All right, like I've mentioned, it's actually testing the resistance of 0.84. Okay, in a scenario whereby it bounced down, okay, bounced off the resistance level, and then proceeding to my entry level 0.837, okay, I will look for selling opportunities. All right, and then my stop loss would be again above my resistance level. Okay, so the level will be at 0.843, a 60 pip stop loss. All right, and then my potential take profit level will be all the way down. Okay, as usual for the past since this year, since January 2022. All right, my euro pound trade ideas, my potential take profit for my euro pound trade ideas, okay, has always been around this level, 0.812, okay, just before the support of 0.808, which is a 250 pips take profit level. All right, pretty much like a 1:4 kind of a risk reward. Okay, so as usual, I'll be nagging you guys. Should you guys actually hold your trade, in the case whereby euro pound sell entry has been triggered, hold your trade all the way until the 200 pips take profit has been hit? The answer is no. Okay, because one thing for sure, euro pound normally doesn't move that much. Okay, normally doesn't move that much unless we have a very strong news coming in from either the euro side or the British pound or the UK side. Okay, it cannot be both. All right, it has to be one-sided. Okay, like for yesterday's upward move, I have no idea why it actually strengthened. The euro actually strengthened against the pound. Okay, but like I think somewhere around here. Okay, let me just go back to the daily chart. Think it's around this period of time, okay, that the Bank of England actually hiked interest rates, okay, that led to a very, very bullish British pound against the euro, okay. So with strong one-sided news like these, yes, we may actually see a big move in the euro pound, okay. But if what do you call it? If there's no strong, what do you call it? One-sided news coming in from either side, okay, we may actually be seeing, euro pound move something like that. Okay, maybe I can just draw like a rectangle over here, something like that. It's 48.3 pips. Okay, so it can actually range for weeks within 50 pips over here. All right, like as shown in the early January. All right, and then with some major news coming in, or maybe some strong sell-off or strong buying in of any currency, euro or pound in this case, okay, we may actually see a strong move. All right, so euro pound, all right, I'll be looking for selling opportunities at 0.837, stop loss at 0.843, 60 pips, potential take profit at 0.812, okay, 250 pips. Okay, keep this euro pound trade very, very short term. All right, that's provided it hits later on today or maybe tomorrow. All right, and any questions on the trade ideas, or FOMC prep, or maybe basically just these two things over here. Okay, so if there's no questions, all right, I mean, if you guys have any other questions, you guys know the drill, right? You just put it in the AgroFin chat platform. All right, so if there's no questions for now, today is Tuesday, tomorrow is Wednesday. Okay, so I'll be seeing you guys again tomorrow during the currency call at 11 GMT plus 8. Okay, take care for now. Bye bye.